Welcome back to the Real Estate 401k show. I'm your host, Mike Weinstein, Justin Frederick over there, and we are down a man.
We're down a man this week.
Dirty Gertie is up at his Airbnb up in Alaska.
Rough day.
Rough week, yeah. He's getting ready for the winter months, and so hopefully he'll bring back some salmon and some halibut for us.
And some cooler weather. You know?
Dude, it's supposed to be hot clear through September.
I see it's supposed to be like 112 on Thursday this
Shoot,
week.
because that was my day that I had to go golfing.
Yeah, of course.
Yeah.
Of course. You're going to burn up out there.
All right, you're going to want to text the word READY to 623-AZ-RECON. That's READY to 623-AZ-RECON. All right, Justin, if you're a buyer and you're thinking about buying a home but not quite ready to buy a home yet, the temptation is I'm just going to sit back and stand idle and not do anything. And the dangers and the risks, because what happens is a lot of buyers are they're still on, the Zillows and Realtor.coms and things like that. And then all of a sudden that perfect property pops up. And now they have to go through all the qualifying process, which could take some time, or they find out that there's something on their credit or something that needs, 1 month, 3 months, 6 months to prepare and fix in order for them to buy a house. And that's just the worst feeling to be in the world, is where you find that perfect opportunity. We know rates are going to drop, and then we can't really do anything. It's going to take time. And what I try to explain to buyers, the best thing that you can do, because it is truly risk-free, it's not going to ding your credit, is to talk to you guys, get set up, build that plan, whether you're looking to enter and make an offer on a property this weekend or it's going to be 3 or 6 months down the road. There's nothing like being prepared.
Yeah, and you were saying, it's risk-free. I would say there's more positive benefits to it than anything. One, I've seen it 1,000 times where somebody thinks that they have perfect credit and they come to us and we find a Cox collection from an old rental property or something wild, or some sort of medical collection that they never even got in the mail, and we can improve their credit score 40 points and get them a better rate with a better mortgage insurance payment. It happens all the time. We do soft credit checks now, so we're not even showing an inquiry on your report, and then we can really dial in exactly what you're looking at. Just go over what payments may look at that specific area, and maybe you want to make some changes to maybe your tax returns, maybe you're self-employed,
Yeah.
and you're looking for more of a qualification, but possibly waiting to file your tax return. A lot of people will file their tax return and then talk to us. I think it's a good idea to bring that tax return to us now, to understand its motivation, maybe to make more money. Maybe it's motivation to look at different write-offs that you could use. Just like we said, there's a lot of benefits to coming to us first, but a lot of people think that, if your score's in the 700s, that gives you the best rate. Not necessarily. Our top tier now is a 760, whereas before it was a 740. So maybe we can get you to that top tier in this period of time, save you some money there. But just like you said, I don't know how many times it happens where somebody's like, yeah, my plan is buying next summer, and this is what we want. So you already got a plan, basically, but then that house pops up and it's an amazing deal. They're offering an incredible incentive. Why shouldn't you buy this particular home? But you haven't got pre-qualified.
All right, you want to go ahead and text the word READY to 623-AZ-RECON. I want to put you in touch with Justin and his team. Help them strategize with you. Help them get you ready. Again, text the word READY to 623-AZ-RECON. I want to continue the conversation on that. Take the time to build up the credit score. Just because you get pre-qualified today to go out shopping this weekend doesn't mean that you couldn't have had a better deal. But before we get into that, true story. I think it was about a year and a half ago. My wife and I decided to buy an investment property out in Queen Creek, And we generally, we fall victim to this. We don't reach out to you until, hey,
Hmm.
let's get ready to rock and roll, right? And 3 days prior to the close of escrow or something like that, something was on my credit report. It wasn't a judgment, but it was a
It was
collections
an old collection.
from an HOA that wasn't even mine,
Hmm.
right? This was a total mistake. Had I caught that ahead of time, I could have disputed it and gone through the motions of doing it. But because I'm now days before close of escrow, and I remember my wife and I, we were in New York, so I'm
Yeah,
sitting in a hotel
I
room.
know
Now
that.
I'm freaking out, and I had to make a choice. It was like $300. Pay the $300 and move forward and close on the house. And I got a smoking deal on that. Or just say, hey, we're going to take care of this HOA thing. And then I lose that opportunity. It was because I wasn't minding my P's and Q's, you
Right,
know?
right. Hadn't you had no affiliation to that?
No, none.
It's wild how that happens, and yeah, and it was due to your credit report expiring. I remember that, and we had to pull a new one. And yeah, that's it's
So you
unfortunate.
need to know what's on it now. And I will tell you this, agree or disagree, doing the free creditreports.com, doing everything online doesn't really give you not only that true picture of what's going on, but doesn't give you the picture of what the lender is going and the bank's going to look at when loaning you three, four, $500,000.
Well, 100%. Plus, you have to pay for those scores if you get the free credit report. Those scores aren't always what we're scoring at because there's 10 different grading systems out there. But typically, that report is 40 pages long that comes from freecreditreport.com, and it's just a lot to sift through, especially
You
if
need a
you're not.
decoder ring just
You
to
do.
figure it out.
Absolutely. When you can do it real quick with us and we can decipher everything on there very quickly, I 100% agree with you.
Well, this is the happiest time of the year. Football has finally
Whoa.
kicked off, right?
Yeah, tomorrow.
No, well, we're airing this next week, so
Oh,
way
okay.
to play
Yeah.
the pre-record game for our listeners. That's such an idiot.
Oh, man.
But I think about football. You think about what a team does to prepare for the field and what a head coach and all their coaching staff, and that's what it is. It is a team. It's not just the players, and it's not just the head coach. It's everybody on that squad and everybody in that organization that helps build those strategies and the game plans to predict this and know that's why they look at film.
Hmm.
That's what looking at your credit report right now is. It's looking at film. Where are the dangers? Where's the obstacles? How are we going to bypass this
How
and
do we
that?
make this better?
How do we make it better? And I think just waiting for the last second to go through the pre-qualification process, and I don't even want to call it a pre-qualification process because that makes people think, okay, I'm now getting qualified to go out and buy a home this weekend. This is more of just strategizing
Yep.
the overall picture of what somebody's credit history looks like, what their income looks like, what their story looks like. And just imagine if any NFL team just showed up game day with no prep whatsoever. Could they win? Yes, but it would be absolutely ugly.
Super
People
ugly.
would be getting hurt. And to me, it's the same thing. It's you are now, and I loved your analogy or your point of, yeah, if you wait for the last second and you get your credit pulled and you get pre-qualified, yes, you could go out and buy a home. But had you done this ahead of time, you could have done the things to build up your credit score to get it up to a certain point so that when you are ready to pull the trigger, you got a better rate and a lower mortgage payment.
The best thing the best thing that can happen to you if you're doing it early is we say, you're good. We're ready to go. There's nothing you need to do. It's just a good feeling, though, and it's a weight off your shoulders of the uncertainty of the whole thing. There's been no inquiries that have registered to your report. It's the best of both worlds, of all worlds, actually. You're being told that you're in the perfect position. You're good to go. If if you do nothing different, next year when you're looking at buying, you're good. The best thing that can happen though is you find out, well, not the best thing. You find out some information that you didn't know about, and you have plenty of time to fix it. Plenty of time to fix it.
All right, go ahead and text the word READY to 623-AZ-RECON. That's READY to 623-AZ-RECON. We want to introduce you to Justin and his team and get you prepared for your next home purchase and in going through that strategy system and process of putting you and your family in that best position. I want to end with this. The other risk of not going with you and not going with a lender and somebody going to a freecreditreport.com website, I don't even know what the URLs for them are. They pull their credit report and they see, okay, I got a collection here, I got this here, and I got this there. People taking it upon themselves to figure out what to do with it. You might want to be that nice guy or nice gal and say, "Hey, I've got to pay off this collection. I've got to take care of this because that is going to increase my credit score, exponentially." Sometimes when you do that and you pay things off and you pay the wrong things off, it can hurt you and delay the time frame in order to get qualified for a mortgage.
Surprisingly enough, yes. Yeah, it absolutely can. And so what we do is we run simulators, which is no cost to our clients, and we give you the ideal simulation on what will do the best for your credit score, whether that is paying off a collection or maybe even keeping that collection there. Surprisingly enough, there is cases where we don't want to pay it off. Surprisingly enough, there's a lot of times where there's a charge off on your credit report, and paying it off doesn't help you at all, but it could be a $10,000 charge off. So some people think that they have to pay that off in order to get their scores up. And a lot of times it does nothing for you. And you could have had that $10,000 sitting in your account helping for more of a down payment that would save you more per month. So it's always a good idea to have a conversation about that credit piece.
All right, and another last one. We'll
right.
just keep doing this.
Yeah.
In conclusion, if I had to say, if somebody were to sit down with me and say, what is the number one myth that you come across when you talk to buyers about buying a home, what would it be? And I would say is the number one myth is that you are required, your down payment needs to be 20% in order to buy a home. I have no idea where that came from, but it came from somewhere.
Somewhere, and it's
because
still
a
out there.
lot of people think that they need 20% to put down on a home.
I would say it's about 20% of people think that. And it's so far from the truth. I mean, you need 20% to get rid of mortgage insurance in one investor's eyes, and that's conventional loans. Other than that, yeah, I mean, you could do 3% down conventional, 3.5% down FHA, and 0 down USDA and VA. You don't need that much down to purchase a home.
And typically, the average, for a strong conventional buyer that comes to us, we're pretty much saying that the ideal amount to get started is 5% down.
Yeah, yep. Especially on a subsequent purchase, 5% down is required. 3% is for a first-time home buyer. 5% down is what you need on a conventional primary home purchase.
Now, we do on this show, we do talk a lot about investing in rental properties and Airbnbs and things like that, though. I just want to be clear, if you are an investor and you are looking at buying a home that you do not plan on living in, we're looking at between 20 to 25% down.
That's ideal. I mean, realistically, the guidelines say you can do 15% down, but you're going to pay so much in fees and cost for that 15%, you might as well do 20% at minimum.
All righty. Do your family a favor. If you are thinking about buying a home in the next 12 months, do not wait to get pre-qualified. Do not wait to have a professional take a look at your credit report, take a look at your pay stubs, and put together that strategy for you. And we want to introduce you to Justin and his team. Ryan and I, we use Justin for all of our purchases. So that should say something, or maybe it doesn't. I don't know. But, but you're going to want to go ahead and text the word READY to 623-AZ-RECON. That's READY to 623-AZ-RECON.